Hey everybody, it's John King of Summit Funding. It is Friday, the 24th of February, the last Friday in February, and I've got a lot of important updates for you today, so let's get started. First of all, FHA has made a great announcement this week. They are lowering their mortgage insurance rates for how much people pay each month for mortgage insurance for new loans going forward. I just got clarification. It's applicable for all loans that we have not drawn loan documents on. We can draw loan documents and draw it at the lower mortgage insurance. Now, what does this mean? It means that a client, a buyer, a homeowner is saving 0.3% off of the mortgage insurance per year. That's basically more than 0.25%, as if you got a 0.25% decrease in your interest rate overnight. Simply FHA saying, our insurance fund, the money that we've been collecting for insurance to pay out claims, we've been collecting a lot of money and we haven't paid very many claims. We have a bunch of excess money left over. So FHA is passing that savings on to home buyers and allowing you to get mortgage insurance that is 0.3% cheaper, and it's effective immediately, even for somebody who is in escrow. If we haven't drawn loan documents on, we are making sure we're getting them the lower mortgage insurance premium. Huge difference. And honestly, this really is a perfect time because FHA is becoming more important in the market right now. Why is that? Because Fannie Mae and Freddie Mac are tightening their guidelines even more. They're taking their computer system and they're tweaking their algorithm, and loans that used to be qualified for conventional, they just aren't qualifying anymore. And the truth is, I don't have a good reason. And it's not just me, it's my peers across the industry. Somebody that has a 699 FICO score, even a 700 FICO score, and they've got 5% down payment, and they've got a reasonably high, but not too high debt to income ratio. Half the time I'm seeing those aren't getting approved conventional. That used to be a conventional loan all day long. But unfortunately, Fannie Mae and Freddie Mac are taking the approach of kind of tightening their rules. And if you fall into that category of them tightening their rules, FHA is going to become the best option for you. So that's great news that FHA has become less expensive. There's another great announcement that came out this week regarding VA. But VA just announced that they're lowering their funding fee. VA has been collecting money for insurance. Their funding fee, you don't pay a monthly insurance fee for VA, but you pay a one-time upfront fee as long as you're not exempt. And typically an exemption is somebody who has a service-connected disability. So if you're a veteran and you're doing a VA loan, whether it's a purchase or a refinance, you're going to pay a funding fee. They're decreasing those funding fees. Now, those are for fundings that happen after, I believe it's a day in early April, like April 7th or April 10th. So actually, it's not for fundings. It's for docs being created on or after that date. Pretty sure it's April 7th. So somebody could get into escrow right now on a VA loan, but we can't draw loan docs until April, again, 7th or 10th. Pretty sure it's the 7th. We can't draw loan docs until that day, and then they'll have the lower funding fee, which will mean their loan amount is smaller, their interest rate is smaller. So that's effective now, provided we have a long enough escrow, or if you have a veteran in escrow, or you are a veteran in escrow, ask for an extension so that you can get the lower funding fee on your loan. All right, big picture, this has been a super volatile week. Interest rates continue to move up. We're waiting. Next week is going to be the jobs report. So next Friday, when I send you my report, we'll know what happened with the jobs report. Here's the deal. The jobs report from February was super scary because the market saw a whole bunch of jobs being created. The fact is they were created by part-time workers, and part-time workers don't put a lot of inflationary pressure on the economy, but people are looking simply at the raw data and they're saying, oh, well, the jobs report's good. That must mean the Fed's going to raise interest rates. Combine that with the fact that you've got the inflation report that came out last week on Valentine's Day. So it's going to be coming out again in the middle of March. The inflation report that came out on Valentine's Day was super concerning, not because inflation was continuing to go up, but it didn't go down. And in January, we saw inflation come down. We saw it come down in November, December, and January. And so everybody's expecting every month to show a lower number, and it showed flat. And that was a major concern. So we're going to see where things go, but we're going to have a huge amount of volatility between now and summer. And you just got to be prepared for that. But this is great news about FHA, great news about VA. By the way, for all of my realtors who are watching, we did a webinar on Tuesday. If you missed it, it is on my YouTube channel. You can see the link down below. It's an hour long, but it talks about our marketing tools to how to convert leads into clients and buyers. It's all about follow-up and how we follow up. And we've got some techniques and some tools that we can co-brand with you that's going to make it a lot easier to follow up and make it a real simple process that we can do with you. So you want to check that out. Some really great things. Watch that video. Looking forward to talking to y'all soon. I will be available this weekend, so give me a call if you need any help with mortgages, and we'll talk to y'all soon. Bye-bye.